Alrighty, what's going on, guys? Edward here, back with another video. And in this opportunity, I want to introduce for the first time in this channel, okay, this is something old already from ICT, but for the first time in this channel, I'll be talking about new weekly opening gap and new daily opening gap, new day opening gap, right? So, what does this mean? How we use it? What's the purpose of this? What's the big deal with this thing? And and so you will see how probably how effective it is. And this is basically another sort of confluence that you can add up to your arsenal. Okay, if you're trading ICT concepts, you know ICT concepts has a lot of things, right? There's a lot of what is called PD arrays, and there's a lot of things um, to have into consideration. And this one is probably one of the ones you want to have under your sleeve. Okay, why? Because it can give you sort of an idea where to target, sort of your bias, right? It's going to give you a little something in there telling that, hey, if you have this level right here, we might actually be targeting that level. The price might be going towards that level. These are levels. Okay, they normally act as sort of like a magnet, so price will get attracted by those levels. Okay, now there's a few things we need to know. Is that for example, the new day opening gap is when it opens, right? When it closes, when the New York session closes, for example. And this is based on New York time only. Okay, so you have to Google based on the country that you're living. You just make sure to Google what time is in your country comparison to New York. We're going to be using New York time. Okay, New York time. So let's jump into right quick, for example, into this recent day. Let me just hide this indicator, and we can see, for example, here. So this is Tuesday. This is Tuesday. Market closes at 5 p.m. Okay. So I'm gonna go. Guys, I'm gonna actually switch to the 1 minute because that's how we should mark it up on the 1 minute. So this is where it closed, right? 16:59. So it closed pretty much at 17, which is equals 5. 5 p.m. New York time. This is Eastern Standard Time. Okay. Once it closes, you're gonna mark up that close, and then you wait for an hour. There's 1 hour, right? Of the markets are pretty much closed. You cannot trade there during that hour. Once it open back up, right? You're gonna see where the candle opened. Okay, that's the opening right there of that bullish candle, and this is how it closed. This is how it opened. So this is gonna be the new day opening gap low, and this right here at the high is gonna be the new day opening gap high. Okay, I'm going to use this line. Now, I want you to see that this level, this is what ICT calls the real support and resistance levels. Okay, we tend to have a lot of reactions in this area, and it normally acts. You see, pretty much this whole ever since the Asian session started, the price was being held by this level, right? Now you could target this levels as well. How? Well, we had a formation today. We had a trade today on Nasdaq right here during New York session. See, the price actually went up right here, swept this liquidity, did a shift in the structure, changing the state of delivery right here. So after the price swept, see, it was accumulating all over this place. Manipulation. So this is pretty much power of three. So manipulation, and then price was targeting this low. Look at the movement to the downside. The price stopped at the level, right? It's like acting as a little support right here. You see price tapping it, respecting it for a couple of times. Then it breaks. Okay, support and resistance, they won't be the price won't always hold a support and resistance, right? They will always get broken eventually. So you can see it got broken, price comes back, retesting the level, right? The actual low point right here, the new day opening gap low, and then from there it reacted to it. So that's what it is. These are levels. We can use these levels either to, let's say, if you're spotting a manipulation, right, and you're thinking about, you check at your level. If your level is somewhere at the bottom, just an idea. If your level is right here and you're seeing manipulation to the upside after an accumulation, manipulation, and distribution, you see the actual change in the state of delivery, you could be targeting those levels. Okay. This is sort of an idea. All right. Or you could use it to re enter. For example, here you saw that the price broke, right? We also have a fair value gap inside, in this break right here, we have a fair value gap inside the gap, right? And then you could have probably entered here, placing the stop loss probably above the swing or above the level, and using the level as your zone, as your protected zone, and you target lows. You target this continued low. So it's just that, okay? So this is the new day opening gap. What are they? Levels, okay? These are levels. They act as support and resistance, okay? Now, one thing you have to know as well is that these levels are valid, or let's say they're active, or yeah, let's say valid for about 5 days, okay? 5 days. It means that you can leave those levels in there for 5 days. 5 trading days, not including Saturday and Sunday, right? So 5 trading days. So if I spotted this level was from Tuesday. That means that it's open for 5 days. It's valid, or it can be valid or touch or sensitive for about 5 days, right? So if it's Tuesday, this level will be valid until Monday next week, right? So it's still valid. You can leave it open in there, okay? So that's one thing you need to know, right? The same thing now for the new week opening gap. It's also valid or sensitive for up to 5 weeks, okay? 5 weeks, the same as the new day opening gap. So the new week opening gap is going to be for 5 weeks, okay? Valid or sensitive for that amount of weeks, okay? Now, where is the new weekly opening gap? New week opening gap. Well, you guys know, of course, markets closes on Friday, right? And then opens on Sunday. So again, we can go here and check when. This is Friday. Here we go. Friday. There we go. This is the closure. So this is the high, and it opened actually a little lower. So this is the new week high. Let me change here. I made a mistake. New week high, and this is the low. Okay. Again, we can use these levels for up to 5 weeks. Okay. Not necessarily the price will have to go all the time towards these levels. No. Okay. Don't get me wrong. Not just because you have this level right here, it means 100% the price will go there all the time. No. These are this is an idea. These are levels are there. Eventually, price is gonna start getting away from that level, right? Just like any other support and resistance, right? So, but let's say we having a crash or something is happening, fundamentals is happening, and prices start crashing. Well, those levels they're still valid from a within at least this short of time, this period of time, which is in this case 5 weeks, right? We could have an idea that probably that's where the price is trying to target to. Okay, these are incredibly effective when it comes to that. So just leave your thumbs up, okay, and just let me know if you want to see more about this, because again, this is for the first time I'm introducing this on my channel. So I am going to be providing and finding more examples for you so you can see how price reacts to these levels, okay? This is going to be just a short one just to introduce. Now, there's one thing. I know it's kind of bothering. You have to be drawing the lines all the time by yourself and yada yada, right? It's kind of tricky that you start having many lines on the chart. So it's a cool thing. There's a cool indicator that you can use if you don't want to write it yourself, if you don't want to mark it up yourself. there's an indicator by, I believe, Lux Algo. It's called, let me get it for you here. This one right here. Oh no, it's not Lux Algo. I'm sorry. It's not Lux Algo. It's Rage Harder, the creator, right here. Lux Algo has another one, but I think I was testing this one. I didn't like it. I think this one looks better probably for beginners, so you can check it out. Once you have it on the chart, look how this actually looks. So I know, you see, again, you have many things on the chart, but you don't have to have them all the time. This is the cool thing about this, because you can simply hide it. By one click, you hide it. If you start marking up many lines by yourself, all those lines that I'm doing right here, for example, these levels, right, that I just mark up, I cannot hide them with one click. I would have to delete the line and probably put the markup. So, when using this indicator, you can simply just one click and there you go. Now, look at the settings. When you go on the settings wheel right here, you see new weekly opening gap, 5. How many new weekly opening gaps to show? 5, right? It will show you. You can even put less if you want to see less, right? So you see the lines, you see the chain, the consequent encroachment, which is the 50%. It will mark up the 50%. I will explain that probably in another video. I don't want to make this one too long. But this is how ICT also marks it up, which is the consequent encroachment is the 50% of the gap. Okay, this is a cool indicator, by the way. And so you have the new weekly opening gap settings right here, and this is the new day opening gap settings right here. Now, again, 5 up to 5 days and up to 5 weeks. And that's basically it. You can change the color, whatever color you want, and you go here and you can use these levels, right? Just understand where they are. You can even see the date. You see, it tells you where the date was. The color, when you see the blue color, you see that we were just tapping the blue zone. What's the blue zone for? It's a weekly. The blue zone, the blue color, it's marking up a new weekly opening. So right here today, we actually were tapping a week from July 28th. So it's still valid. Remember, 5 weeks behind, right? It's pretty much a month, more than a month behind. So you see, we were tapping this level today. So again, you don't have to have them all the time on the chart. If you don't want to see these lines, you can just simply hide it. And in the morning, whenever you go to trade, you just make sure to take a look, where are the next levels, the close levels that we have, and you see the dates in it. You see the 50% consequent encroachment. I really like this one in particular for beginners. If you don't want to mark it up yourself, you can just have it in there. Pretty cool tool, and it's free. So yeah, that's basically it, guys. Let me know what you think about this. And again, I want to hear your comment. I want to see your comments in the comment section. If you want to see more about this topic, I'm sure I'm going to be recording more videos about this, showing you examples, daily examples, all of this stuff, and that we can use in our favor. Okay, have it in there in our arsenal. So thanks again for watching. Make sure to subscribe. Make sure to follow me on my Instagram. The link is in the description below. There is a giveaway coming soon this Sunday. You don't want to miss it. Okay, I'll be giving away one lucky winner a lifetime access to my mentorship. So if you've been following me for a long time, you probably want to join, but uh, you don't have the money to join in, or you're studying or something. You're a student. You're not working. You don't have money to pay, so it's fine. You just make sure to participate. Now on my Instagram, make sure to follow me. I will be posting a picture. Right, I will be sharing there a post on Sunday, and you have to leave your comment in there why you would like to join. And with that, you're basically participating. As many comments as you want, and I will be choosing one comment on Monday next week. Okay, so one winner, one comment randomly, and good luck. So if you want to be part of that, then just make sure to follow me on my Instagram. So I'll see you guys over there. Thank you for watching. Take it easy. See you in the next one.